What's up, everybody? Wednesday, August 6th. Market up today. This week, there was no real big fiscal day. Like, we didn't have a Social Security payment today. That'll come next week. Next week will be big because we got the Social Security payment on Wednesday, and then we have the quarterly interest payment on Friday. I think I said yesterday in my video that the flows for this cycle, they're going to peak. And when I mean this cycle, that usually coincides with a quarterly cycle when you have these quarterly interest payments. You get your usual first of the month big flows. You get your 4 times a month with the Social Security payments that come out usually on Wednesdays. And then you get these quarterly, with the quarterly interest payments, you get kind of like boom, boom. We just had last week, Friday was the first of the month payments. That I told you that was 146 billion of a leading flow and like 104 billion net flow. And next week, Social Security and quarterly interest payment. So that's really going to boost up the monetary condition. And again, when I say monetary condition, I'm talking about these flows. I don't, most people would think I'm talking about like the Fed and monetary policy. No, to me, that's not the monetary condition, because whatever the Fed does, that's just an asset swap. Okay? With the exception of like the Fed paying interest on reserves, that's adding to balances of the financial system without taking anything away. But other than that, all monetary operations, they're just an asset swap. I tried to explain this to you guys, like the Fed is a bank. If it lends, it's lending against collateral. So some of that collateral is it's kind of taken in a way because the Fed is lending against it. It's like if you get a bank loan, it's great. You get a deposit in your account, but now you have a debt that you have to pay off every month or something like that with interest. Okay? So you better make sure that that money is deployed in a way that exceeds what you're going to have to pay back plus interest. So when I talk about monetary condition, if you hear me say that, then just know what I'm referring to are these fiscal transfers, one way or another. Either, net transfers from the government sector to the non-government sector, or negative transfers from the non-government sector to the government. That's when we pay taxes. What happens when you pay taxes? Your balances get drained. That's not fun. That leaves you with less money. I just told you guys, what was it last month? It was something like, I don't know, it was like July 14th or July 17th, something like that. I got to go back and look. That the April-June tax drain was finally replenished. In other words, we finally recovered. That was 3.5 months or 3 months it took to recover that drain. Now, we don't all feel this equally. Some people feel it more than others. But the point is, I always also speak in terms of the aggregate economy. All right? That's what I'm interested in, because like what I look at is income going into the economy, or is it being sucked out? Because that's the driver, that's the fuel, that's the energy that pushes everything. So next week we'll see a peak in the flows, and then, actually there's not a lot to talk about today. I mean, we had an up day, but I keep repeating myself, but I'll put it out there again. September, October, things may start to change. By the way, August 7th, which is tomorrow, but I believe Friday, the new tranche, the new iteration of tariffs are expected to hit. But a friend of mine told me now that firms are allowed up to 30 days before they have to pay these tariffs. Somebody told me that today. One of my subscribers told me that today. So if that's the case, we probably won't see the full impact of this new tranche of tariffs that are going to be implemented starting either tomorrow or Friday. But like I've been telling you guys, I'll see that in the daily Treasury statement data every day. Like right now, it's running at about 400 million a day, which, that's up from about, if you compare it to last year, that was like around 250 million a day, probably the average. Now it's like maybe 425 million a day. So that's up. That's a pretty substantial increase. It's not a doubling, but it's a pretty substantial increase. And then as of Friday, we'll see how much bigger it is. So for all you people that think like I'm some kind of perma bull or something like that, I keep telling you, I just follow the numbers. They tell me what the economy is going to be doing. I just follow these numbers. So like right now, up until next Friday, that's a positive environment. And I said, look, I'm not forecasting right now what it's going to look like after September 30th or even in September and then beyond in the fourth quarter, because I don't know how the big beautiful bill is going to play out in terms of how the fiscal flows are going to look. I need to see those numbers. Now, as soon as there's some development in those numbers, as soon as we have at least a snippet of data, some period, it doesn't have to be that long, a week, a couple of weeks of data, where if we start to see a trend evolve in those numbers, one way or another, positive or negative, and that goes for the tariffs too, then I can make a forecast. But I'm not going to be jumping in right now like one of all these people are like saying, oh, the tariffs are going to cause a recession, or it's not going to cause a recession. A lot of people are making bets right now, and that's not to say that somebody clearly could turn out to be lucky and on the right side of this bet. I don't deal in luck. I deal in known quantities. I deal in things I know. Okay? And that comes from the data. Could I make bets right now based on what it's going to look like, 6 months from now, a year from now? Absolutely. But that's just going to be a guess. I'd rather see how this stuff develops, and then I can make a very rational bet with a high degree of certainty of how that's going to play out. All right? So that's where I am right now. If I'm not able to provide a lot of information at this particular moment, it's because there's not a lot of information available. Sometimes there's just not a lot to talk about. Sometimes not all the pieces of the puzzle are there. That's life. What can I tell you, man? I don't get all stressed out about it. I don't have some kind of crazy need that I have to do something. I'm not needy that I have to do something all the time. All the time I have to do something. No, why? I don't understand people who are like that. Like all the time I have to do something. I do want to be productive in my life. And I try to stay busy in my regular life. But when it comes to the markets, and when it comes to the economy and economics, I can only do what the reality shows me. Why do I want to just guess when it's going to present itself? That's the thing. Like I used to be the other way. I had to make a bet. I had to have a position on. When I didn't even know fully what the conditions were, or what the, what kind of fundamental trend was developing. I had to do something. You see the difference? It's like when you have this burning need to have to do something all the time, that's not smart investing. That's not smart trading. That's just like that whole thing, that behavior is being driven by something entirely different than making money. That's being driven by, you need that adrenaline rush. You need the adrenaline rush. You need the action, whether it's warranted or not. I don't do that. I used to a long time ago. I mean, maybe with age comes a little bit of wisdom or a little bit of self-control or a little bit of both. I don't know, but I don't do that anymore. And I don't recommend that you do that either. I come on here, I tell you guys, more importantly, people who subscribe to my report, they get to know every day. I'm sending out emails all day. I'm sending out emails in the morning. I'm sending out emails during the day. I'm sending out emails after the close of business when the daily treasury statement is released. Just updating everything. Do I see anything new popping up? If not, just relax and enjoy the ride, as I say. Anyway, that's it for today, folks. And I hope you had a great day. Please like and subscribe. Thank you very much if you've already done that. And don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. Talk to you tomorrow. Bye.